Where are interest rates headed in the second half of 2023? Let's take a look. Well, first, let's look at where interest rates have been. They were much lower in 2022. A lot of y'all know that. And in fact, over 80% of Americans have an interest rate under 6% on the home that they own. And a lot of people have interest rates down in the 2s and 3s. And then this year, we've been primarily in the 6s. That's where interest rates have been this year. And there's been some fluctuation this year. It kind of hit a peak at the beginning of the summer. And then over the last month or so, generally speaking, the interest rate pressure has gone down. And that's a huge deal to homeowners because interest rates have a big impact on affordability. Well, moving forward, one of the most important things with interest rates to watch is the 10-year Treasury yield. Historically, mortgage rates and the 10-year Treasury yield have had a relationship where they have tracked each other. And there's a spread between those two. And I'm not going to get into all the numerical things and the reasons for this, but I'll hit it at a high level. And if you ever want to talk about this in more detail, just hit me up. I'd love to do it. But generally, those historically have tracked like a 1.7 difference. So mortgage rates been about 1.7 points higher than the 10-year Treasury yield. This year, we've been primarily around the 3% difference. So 1.7 to 3, that's a big difference. And if you've ever bought a house or are looking to buy a house, 1% on your mortgage rate, big impact on what you're paying on your house. And so, there are a handful of reasons for that. One of the biggest reasons is there's been a lot of economic uncertainty. There's been inflation, and that's led to it. There are other reasons, like people think that these mortgages are going to get prepaid early because the rates are higher, and at some point, people are going to be able to refinance those. So there's a handful of factors to that. But now that hopefully we have inflation under control. I mean, that's what it's been looking like. Those numbers have been improving over the last couple of readings. There's a chance that the Fed has stopped raising interest rates, or maybe we only have one more interest rate hike in the future. Could we start to see that 3% number come back down to 1.7? Well, I think we're unlikely to see it go all the way back down to 1.7, especially quickly. But we could start to see there be pressure for those two to come together. And so if the 10-year Treasury yield is not increasing, they're coming back together, that could be good for pressure on mortgage rates. A lot of this depends on inflation, because if the inflation numbers continue to be good, that helps so many things. But I think as you talk to experts on this, overall, people are expecting a little bit of downward pressure on mortgage rates for the rest of this year. And for there to be upward pressure, we'd have to have economic news that the Fed does not want. And that's like, hey, the economy is doing too well potentially, and inflation goes up, or unemployment is really, really too low in their eyes. But if we kind of continue on the path that we appear to be on, I think that we're likely to see, based on what everyone's saying, some downward pressure on mortgage rates. And that could be awesome for people who are looking to buy a house in the fall or winter, because you usually find a little bit better pricing in the fall or winter on houses. So if you find a little bit better pricing and you find a little bit better mortgage rates, second half of this year, that might be the time for you to get into the housing market and take advantage of it. If you have any specific questions, want to talk about this more, reach out to us like so many of you do. Everybody else, I'll see you next week.